Senior retail analyst Oliver Chen is behind the Ulta Note. He covers luxury goods and luxury retail. Oliver, it is great to have you here on set.
Thanks, Melissa. Great being here.
Part of the Bank of America note is something that we all know, and that is that there's some sort of a synchronized slowdown across the globe. U.S., which is a major market, obviously, for retail, there are green shoots there, but the EU is flat to lower. China, the weakness is maybe just beginning. Where do you stand on sort of what the macro conditions are for the retail consumer?
We're cautious. China continues to be a longer-term issue, in part because of the housing market as well as consumer confidence, and that's a big issue in terms of the way people spend. At the same time, Europe's been tough, too. It's been very volatile in terms of geopolitics. U.S. has been better than feared, but the luxury market is still working through a hangover, specifically a lot of aspirational spending, and we're seeing consolidation because it's not an easy industry between Saks and Neiman's, et cetera.
So when you think about a secular change or a cyclical move, how do you think about this particular downturn that we're in?
It's temporary, but a little longer than expected because the housing issues and the housing market in China in terms of household confidence as well, that may take a while. And China is such a big contributor to growth. But it's temporary because the luxury industry is a great place to be with a rising middle class at large. Our top idea is LVMH, but we're very selective. The Gucci brand at Kering's having a lot of issues. So there's winners and losers. There are certain trends happening, such as beauty and quiet luxury, but Ulta's facing a ton of competition from Sephora, which is owned by LVMH. Fundamentally, though, luxury is a great long-term industry, but luxury constantly has to reinvent itself for new, younger customers as well.
Can I just want to, what is quiet luxury? Like no logos, no.
Well, it's a return to cost per wear and less logos and quality.
Okay.
And that's a change that's happening with younger consumers. And what's going viral is that. Louis Vuitton is amazing in that the portfolio is so broad where there's loud and quiet and everything in between there.
So when you look at luxury, China accounts for probably almost half of the spend in luxury. And when you see them putting caps on income on the upper end, it seems that they don't want rich people, and they're not doing anything to build the middle class. So I hear you talking about middle class, but is luxury, how long is that investment out, A? And B, Walmart versus Costco. Just sold my Walmart. Should I go into Costco ahead of later on in the week?
Well, we continue to be excited, Steve, on Costco because it's all about value and it's global and a lot of square footage growth outside the U.S. And both Costco and Walmart are getting wealthier consumers that are trading down. Walmart's our top idea because it's a technology company, plus it's offering tons of value. China's very mixed in terms of the stimulus and the possibility of a stimulus. However, devaluing the currency is a big risk factor that the government's really weighing. So the worries there will continue for the foreseeable future. Over time, it's just such a large and important market, over 30% of the luxury market and over 50% of growth, that will continue to be a long-term driver. But we're going to hear lots of scary headlines over the next few quarters at least. Walmart, AI company, as well as everyday low price. You're thinking about the future of retail being needs plus wants. We like the new CFO at Target. It's still a work in progress, but Walmart's our top idea. We love Costco. The valuation's pretty extraordinarily high, but a very sticky membership model. And maybe it's not even a retailer. It's a subscription.
Quiet luxury, if you hold up your right hand, are those two Cartier bracelets, because those suckers are beautiful, number one. Number two, department stores, you've been very cautious on correctly. I think you just downgraded Kohl's. Is there any lifeline for any of those stores?
Yeah, we were at Bloomingdale's today, and they have a new CEO who came from Selfridges in Europe, and really driving experiential retail, new things you can't do online in person, and driving very good, unique products. So TBD, I'm hopeful, but a lot has to happen, and the degree of competition and the ability to get Gucci at Gucci and everywhere is something to watch. So we'll see, hopefully. There's a lot of initiatives in place, but I'm totally fine being on the sidelines.
How are you forecasting Christmas or holiday spend, I should say?
Well, thankfully, we had a pretty decent back to school. That usually correlates pretty well with holiday, and it's a gift-giving season. But winners and losers. For example, parts of athletic leisure are working, parts of denim are working, beauty is working, but it's pretty selective. Not everything's working.